Hello, everybody, and welcome to the session. This is the 3D market commentary. This is our weekly session that we do on the Mondays to prepare for the week ahead. Today is September 26, 2022. My name is Jose Blasco, and it's my pleasure to be your guide today. Before we get started, I would like to highlight on the upper left side of the screen our financial disclaimer. Please read it carefully. This is important information. It is fairly short, so I guess it's okay for me to have this kind request to have you all read the disclaimer completely. Thank you very much, counting on that. With that said, ready to begin our market analysis. We're going to be looking at 5 key markets, understand the market conditions. Obviously, there is a lot of heat out there, isn't it? And many movements in many directions, many markets going down, certain markets going up very intensively as well. So let's go ahead and let's begin our market commentary by looking at those 5 very relevant markets. So what do we have? Well, the first thing I would like to highlight is the fact that on the left, I have here our 3D approach to understanding the market. The first market I'm going to check, as you can see, is the S&P 500 index. So I'm about to scroll this up and look at the chart on the right to understand and go over the commentary itself. But again, apart from doing these sessions live on the Mondays, you can certainly subscribe and sign up for free to our news flash, where you receive this updated information in a daily basis at this time, which is an hour plus before the US equity markets start trading, which is very handy to prepare for your trading day, isn't it? Okay, so we're going to start with the S&P 500, and we're going to be looking at 3 dimensions. We're going to look at the climate, we're going to look at the UFOs, and we're going to look at market volatility. So the climate is down here. Later in a moment, I will show you as well how you can get your own auto climate. It's a free tool that you could use with TradingView and other platforms as well, but I am actually using TradingView right now. With auto climate, basically what we are looking is what's likely going to happen from a directional point of view based on stats. So the climate may be red, the climate may be blue. Blue would be what we call an up climate. Red would be what we call a down climate. So the S&P right now is presenting us a down climate, which is confirmed. So we know it's confirmed because the dot is thick. When the dots are thin, like those thin blue dots, for example, then there is lack of confirmation on the directional component in the marketplace. Right now, there is no lack of directional component. The market is really crashing hard. So it's pretty clear it's a confirmed down climate. Now, having said that, here are the stats, and here's the key. So statistics suggest that a normal thing to happen for this market when going down is to fall 3 candles at a time. This is a normal thing to happen, and certainly this could be shorter than 3. Certainly, this could be more than 3. A normal thing to happen means 1 standard deviation. That means 68+% of the cases. It doesn't mean every case. It's probabilities, right? So probabilities is not a guarantee, but it's a very powerful reference, isn't it? So 3 is the normal thing to happen, but this market has been falling by 9 candles already, which tells us that statistically speaking, this market really has felt too much, okay, for too long. Now, having said that, when we look at the UFOs, which is the next component, UFOs, that stands for on-field orders, look like flying saucers on the chart, isn't it? Red UFOs, green UFOs. This is where the buy on-field orders are in green color. This is where the sell on-field orders are in red color. So notice that while we have been dropping 9 candles out of 3, which 3 is a normal thing to happen, the fact is that there is nothing to stop the S&P from falling until we get to 3480.00, which is where we find the next significant stack of on-field orders to buy. So that's interesting to know, and also very interesting to know that if the S&P try to go higher, okay, which maybe there is profit taking, and we may see 1, 2, 3 days on the way up. The moment the S&P reaches the red UFO located at 3763.5, then the expectation would be for the on-field orders to get filled and see the S&P continue on the way down on its way to 3480. So again, we have in front of us a pretty bearish scenario, technically speaking, based on probabilities. The market right now is not respecting probabilities because obviously 9 is much more than 3, 3 times more. But again, there is a reason for that. There is no UFO anywhere close by, right? So we're going to have to see if some profit taking comes in. And also, if, and this you will get updates on your email on a daily basis, if a new green UFO shows up, because right now we don't have it, but if a new green UFO was to show up, like I am plotting on the screen artificially right now, then of course the whole market analysis would change, and now we would expect the S&P to go higher. And this, by the way, my friends, could happen anytime, even though as we speak, it's not happening. Okay, so this is why we send a copy of the market report every day. Okay, so make sure that you follow the instructions on the screen so you can get yours. Now, speed of movement is expected to be at a rate of 32.55%. This is extracted from the options on the S&P 500 index. This is the VIX, and if we reverse engineer the options pricing models, so then we get 75 plus points a day, either up or down, 166 points a week, either up or down, 345 plus points a month, either up or down. This is the speed of movement. So again, we are talking about reaching 3480. This is like 200 points below. So, you would think that a week or a week plus, and we should get there. Okay, so that would be the expectation. So next market that we're going to analyze is crude oil. And as I am loading crude oil on the chart, I want to highlight, I told you can get access to your own autoclimate, which is for free on our website. So I just highlighted on the screen where you need to go to do that. So please feel free to follow the instructions on the screen. But basically with crude oil, we are dealing with a climate which is also down and confirmed. Okay, so thick red dot. Statistics suggest that 5.77 is a normal thing to happen. It's been falling for 7 candles already. So again, just like the S&P, surpassing what statistics would suggest from a duration point of view. Okay, and we'll see later when I get to market number 4. You will see why all of this is happening. While certain markets are not really following stats from a duration point of view, and it's because there is a market out there, which you will see in a couple of slides, where that is basically the leader. And many of you, if you have been listening to me before, you know what I'm talking about. Okay, but you will see that in a moment. So anyway, so crude oil, we are talking about a down climate. Sell-on field orders are relatively close, located at 81.73. Buy-on field orders are located relatively close, located at 73.95. So again, same comment as the S&P. If oil tries to go up, it's going to hit that pile of orders and likely going to go back down all the way to hitting 73.95. I remember a few weeks back where I was mentioning the buy-on field orders located around 80. That the perceptions from some of you, I remember, was a bit like, really, the gold, crude oil is going to drop from 100 plus to 80? That seems like a long way to go. Well, there was no UFO until that price, right? And it happened. So in this case, the UFOs are closer or nearer. So, it's even more likely when I get there. But it's still a bit of room to go for crude oil to keep falling. Now, speed of movement for crude oil, we extract that from the options on crude oil futures, which are pointing at 50.82% implied volatility as we speak. So if we reverse engineer the options pricing models, we're talking about 2.5 points a day, either up or down, 5.5 points a week, either up or down, 11.5 points a month, either up or down. Let's go ahead and take a look at the next market, which is gold. Again, key 5 markets. The first we started with was the S&P, largest equity index market in the world. The second is crude oil, the most important energy market in the world. The next one is gold, the most important metal in the world, in the financial markets. So key markets to understand. So what do we have with gold? Well, guess what? The same thing. Okay, and you will see next market, you will understand why. 9 out of 576 confirmed to the downside. That's the climate that we got. So again, another climate that is overextending beyond what probabilities would suggest, with a significant amount of sell orders located at 1661.3, pretty close from the current price. So if gold tries to go higher, it's going to hit that pile of orders and likely going to go back down until 1612.4, which is where we have the next set of buy-on field orders, where we would expect then gold to correct, a nice place to take profit if you're short gold. Speed of movement based on options on gold futures, it's based on 19.42% implied volatility for such options. So that if we reverse engineer options pricing models, that would be 20.14 points a day, either up or down, 44.33 points a week, either up or down, 92.29 points a month, either up or down. And finally, we are getting the very important market, which is driving everything, absolutely everything. This is the market that is basically breaking all statistics for everything out there, which is the dollar index. Okay, the dollar index, the dollar being the most important currency in the world, the dollar being traded in 80% of transactions worldwide. It's certainly a key ingredient, a key element in financial markets. No matter what you trade, if you trade equities and the dollar is going higher, so that means the dollar is stronger. So that means that you need less dollars to buy the same stock. So what happens to the price of the stock? It goes down because with less dollars, you can buy it because the dollar is stronger. Same rationale applies to crude oil. Same rationale applies to gold, why those markets are priced in dollars. In a moment, we'll check out the Bitcoin. Same rationale applies to the Bitcoin. And look at the spectacular moves that are happening on the dollar. The dollar itself is breaking stats, 9 out of 5.01. So because the dollar is breaking its own stats, then most markets that are traded in dollars are as well breaking their own stats. Okay, so now, most interestingly, it seems that this is not over at all. We got another pile of buy and fill orders located at 111. So if the dollar drops to 111.58, we got two very relevant stacks of buy and fill orders that will likely bring the dollar back higher. Okay, so we've been talking about that during the whole move and beyond. It's been months and months talking about this. If you're new to the sessions, that may be new to you. If you're not new to the sessions, you heard me mention the importance of the dollar index, especially in 2022. Options on currencies, we're talking about an expectation of 0.91 points a day, either up or down, 2.01 points a week, either up or down, 4.18 points a month, either up or down. That would be the expectation for the move for the dollar, based on the implied volatility priced in those currencies. And finally, the last market that we're going to check is Bitcoin. I'm actually looking at Bitcoin future. This is the bakkt Bitcoin that trades in the ICE exchange. And you have two ICE exchanges, one in the US trading the full size contract, and one very interesting one in Singapore, where you have the dollar index, which has many advantages apart from its smaller size. So Bitcoin futures, we can see here, the climate is confirmed, red and thick 8. No statistics there because Bitcoin, believe it or not, is still a pretty young market. It runs statistics that are that relevant in this time frame. We are looking at the daily time frame, of course. Intraday, it's a different story. And again, we are in a down climate, but what's important to see is that notice that we got two piles of sell on field orders located starting at 19,372. Current price of Bitcoin is 18,850. So if Bitcoin rallies a bit, it's going to hit sell on field orders, and guess what? There's nothing to stop it until we get to 14,347.5. So a long way to go for Bitcoin on the way down, unless, as I said, on the equity index markets, unless very large players come in and they just add lots of buy on field orders. And if that was to be the case, guess what? We're going to get green UFOs show up on the screen automatically, and then you would know the drop is probably over. But at this moment in time, this has not happened yet, and therefore, based on the current market condition, this market is indeed more likely going to continue falling all the way on its way to 14,000 plus instead of turning around. Okay, so we're going to have to observe that. And before we conclude, I wanted to briefly mention about the economic reports for the week. I'm not going to say it's a boring week, but certainly compared to prior week with the Fed, next week with the unemployment number in the US, this week is quiet, if you wish. Okay, so we have tomorrow durable goods in the US. That's, of course, relevant to a certain degree. On Thursday, we got the GDP in the US, certainly relevant for economists and so on, and can certainly have an impact on adding a bit of volatility in the marketplace. But those numbers are not as relevant, as impactful compared to what I just mentioned, like the Fed reports or the unemployment number the next week on the first Friday of October. So we'll talk about this again next week when we meet. And for now, I will just say bye. The session is now concluded, and it's been my pleasure as always to help you understand a little better what's happening out there as the trading week begins. You guys take care, have a good trading week, stay safe, and if you need anything from us, from our team, obviously you can easily connect with us on our website, on the emails, contact us by joining our live trading sessions on our website as well, or even watch our YouTube channel. Take care, trade well, see you soon, bye-bye.